Hello and welcome to the Investor Financing Podcast. I'm your host, Bo Eckstein, and today we have a great guest, Adam A. Adams, better known as AAA.
All right, it's easy for me because people are chasing me. People are like, "Hey, Adam, can I go in your deal?" And so I thought, if all I do is teach that one piece, how to get in front of your investor so that they're chasing you and you don't have to chase them anymore. If I just teach that one thing, let them take their courses from all of these great educators that are engineer by trade in their mind. They know the numbers. And I just teach you how to market yourself so that passive investors chase you.
Welcome to the Investor Financing Podcast, where we interview real estate investors and lenders so you can learn all the secrets to getting your projects funded and scale your portfolio. And now, your host, Bo Eckstein.
Hello and welcome to the Investor Financing Podcast. I'm your host, Bo Eckstein, and today we have a great guest, Adam A. Adams, better known as AAA. It's a lot easier. It's a kind of a tongue twister, right? For you guys that don't know Adam, he has educated thousands of investors through real estate conferences, radio, and podcast interviews, his coaching program, and his Meetup groups. Adam hosts the Creative Real Estate Podcast, a podcast listened to around the world with hundreds of thousands of downloads. His efforts to educate and inspire other investors has earned him the prestigious title of Master Investor by Think Realty magazine. And he is also a 3-time Hall of Fame winner from Real Estate Mentor for his success in multifamily syndications. Meetup.com has recognized him as one of the top 6 meetup organizers in the world from 2018. In 2005, Adam took the plunge into part-time real estate investing, but it quickly became his full-time passion. And we're going to dive into this today amongst a lot of different things. And actually what really excites me the most about today's conversation is I'm a big brand of building a brand for whatever you're doing. And I think there's lots of discussions out there about real estate investing. And to me, it's great, but really I enjoy the marketing component and figuring out how you build brand, how you attract maybe private money, right? How you attract joint venture partners and all of the things that go along with it. And kind of a cool story to share with you, Adam, is in 2014 from my YouTube channel, I actually got casted for a TV show on HGTV. So I'm such a huge fan of like putting yourself out there, even if you're a little shy and you're worried about stuttering and things like that. So why don't you kind of just dive in and give us a kind of a brief update of what you've been working on over the last couple of years and introduce yourselves to maybe some of the viewers or listeners that don't know who you are.
Adam A. Adams, AAA, as you said, it's way easier. Everybody's like, I can't say it. Adam Adams. And really, my main focus for ever since I can remember is I've either been in construction or real estate investing. That started in 2005, real estate investing. Construction in 2006. Well, technically, my dad, he is a general contractor. So I was putting up walls and electricity at our rentals. We've always had rentals. And so we did that for a long time. Other than that, it's all just been business, and entrepreneurs, they see an opportunity and they see a need, and then we try to create something. And I've noticed with there's a couple things that I've created. One of them is syndications for people to be able to put their money into. So a lot of people seem to want to be part of real estate, but they don't really want to do all the work. So we created a niche in the syndication space a few years ago. And then right now I'm helping podcasters launch, grow, and monetize their shows. And we love to, I'm excited to talk about anything meetup.com, anything podcasting, anything multifamily. So I'll let you steer the show. But I will say, you mentioned the Creative Real Estate Podcast as you were doing the intro. I need to update that intro. I need to do 2 things. Number 1, I think it's too long. I'm sorry you had to read that whole thing. Number 2, I sold the Creative Real Estate Podcast last year, and now I'm starting the podcast on podcasting, right? They're right there, the podcast on podcasting. So that's a new one. But Crepe has a new owner. So that's my
Perfect.
baby.
Well, very good. Very good. So let's kind of, we have a lot of similarities. One is that I've been running a meetup group. Actually, when I lived in the San Francisco Bay Area, I recently moved to Las Vegas now a year and a half ago. But for 5-6 years, I ran a large meetup group, and now I'm trying to slowly make it more of an online platform. But I find the meetup world to be just back when we get out of this COVID epidemic we're in, and we go back to belly, that's always just a great place, because I think people like the personalized interaction, right? As opposed to, I don't mind Zoom and things like that, but I had some great success just networking and meeting people and like getting business partners at a meetup. So what was your kind of like thought process on like forming a meetup group, and like how you were able to provide value, and also how you were able to monetize that in a couple of different ways for yourself through, obviously maybe investors, but also opportunities? How'd you grow it? What was your thought process? And even in today's world, do you think, going and starting a meetup group is good for investors that are looking to network, meet people, and, potentially raise money?
Super good question. There's a lot there. And so to start out, why did I start a meetup? The main reason why is because I knew that I wanted to grow a brand. I wanted people to know who I was. I wanted people to refer their friends to me. I wanted people to passively invest with us in our deals. And I wanted more deals to come. So I thought it would be obvious to be the leader of these meetups. I can go to as many meetups as I want, but I notice a lot of times people do business with the person at the front of the room. And so I was like, I need to be the front of the room. I need to be at the front of the room. And the only way I could think to do that is to just create my own. My thought process, as you asked, for starting the meetup, behind why I wanted to do it, it was the how. The how was I needed to find a niche. I needed a niche down and do something that not everybody else was doing. And the only way to figure that out is I had to do a little bit of recon like they do in the military. They do the reconnaissance ahead of time. They do their studying. They go and look at what's there, what tools they have, who's on the other side. And for me, what I did to build a meetup, so I was like, when do they meet? How often do they meet? What do they meet about? What do they talk about? What is their formula? And I just start niching down to try to create something that has not been. For one thing that wasn't around was anybody meeting every single week. No, nobody was meeting weekly. They were mostly just meeting once a month. So I said, okay, I'm just going to meet weekly. We'll see how this goes. The second thing I didn't notice anybody doing is nobody talked about creative real estate. And I thought, I've done a lot of, creative deals where I bought properties without my money, without having to use any money, without having to use any credit. It's all through partnerships and through lease options, subject tos, owner financing. I had done a few things like that. And I was like, okay, I can add value there because it's not yet there. The other thing that wasn't around at the time was everybody, 90% of meetups were meeting after 5 p.m., like 5, 6, 7. And the other 10% were meeting for breakfast. So I said, all right, I'm going to become the first lunch club. So I created a lunch club and served people that were underserved. What ended up happening with that meetup is because we niched so well and because we added as much value as we could at each and every single week, we grew that meetup where the first meeting, I think we had me, my business partner, and 4 other people. And then about a year later, we were having consistently over 100 people come every single week in the middle of the lunch day. They would come for a couple of hours. It was kind of awesome. It did what we needed it to. So that thought process, was, hey, I need to start a thought leadership platform somehow so I can get more value. And B, how do I niche it down so that it is something unique? Part of that is messaging and branding. So when we talk about messaging at a meetup or for your podcast or for any other type of thought leadership that you have, I want to hypnotize or brainwash, or I'm trying to think of all the different terms for this, influence people to know why they should come to this one. And the hypnotist, the brainwashing, the influence comes from constantly having the same message. So for example, when they come to my meetup, I would say, hey, just as a show of hands, let me know if you're completely brand new. Don't raise your hand. But if you've done a deal at least more than just your own single family residence, you actually are an investor, please just raise your hand and everybody look around. So we've got like 90+% of people raising their hand because we're meeting at lunch, by the way. And it's all of the newbies are coming in at 5, 6, 7. So I mention that as my messaging each and every time. So I'll say something effective. That's why you want to keep coming here every single week, because other groups, they do this and they have these type of people. This group is where the real players are. If you want to be able to connect with people that are doing things, keep coming here. The second and last piece of the messaging that I'll mention before I turn it back is as we had people come in and we were having them meet every single week, I would mention this thing that I learned in sales, psychology, and persuasion. And what that one thing is, it generally takes 6 to 15 times for you to meet with somebody before you start doing business with them. And so I would use that as my messaging, my brainwashing every single meetup. I would just jump in and say, hey, there's a lot of meetups that meet monthly, and I think that's fine. But we know that psychology says that it takes us 6 to 15 times in order to start doing business with each other. And I don't want you guys to have to come here for 6 whole months before you ever do a deal. That's why we meet every single week, so that in just a few weeks, you're already doing business with these other people. And now we're using social proofing. These other people that come every single week consistently. Raise your hand if you come here every single week. And then almost everybody's hands start going up, and it shows the social proofing as well. So there's a lot of psychology in that. The last question that you wanted me to unravel about the meetup was, how do I get value? You get value by giving it. There's a song, darling, if you want me to be closer to you, get closer to me. And it's the same thing. If you want to get value out of a meetup, you just got to give value. So like with you, Bo, your YouTube channel is super popular and you're getting a lot of value, but you wouldn't get that value unless you gave it. And so here you are on a consistent basis, giving value on the YouTube. And because of that, there's this law of reciprocity that allows the value to come back to you. I'm trying to remember the guy's name. Might have been Zig Ziglar, but he said, if you help enough other people get what they want, you'll have everything in life that you want. And so how did I get value from my meetup? Because we just added value. We didn't sell anything. I constantly was the first person to get the deal. People would come to me first and say, hey, Adam, can you take this down? And if you can't, I'll go to one of these other meetup organizers, or I'll go to one of the other people in your meetup. But they always came to me first. Hey, Adam, I've got 50 grand. Don't know what to do with it. It's in a self-directed retirement account. Can I just invest it with you? So they would ask me first. So to answer your question, I got many, many deals. I couldn't even count how many deals. I don't know. It's a lot. And I do know that my first $4.2 million that I ever raised from OPM came through the meetup group. So that's how I got value.
I love that. I love that story. Now let's kind of, okay. So before we jump topic, actually, so, I mean, now you're kind of at a different level. You've raised lots more money since you started that group. When things somewhat go back to normal, are you going to start doing meetups again? Or is it you've already kind of past that point now and you like
I
your
like the question.
online platform now better? Or do you see, like, for me personally, I want to get back to doing a meetup, but I also am really enjoying being online now. And I love the fact that I can put a polo shirt on and a pair of sweatpants and nobody knows that I'm wearing sweatpants, right? And I can talk to you in Colorado or Hawaii, wherever you're at, right? Like, and we can get in front of thousands of people this way. Maybe not live, but over time, downloads and things. So what's your thought process on going back to meetups? And also kind of touch on the fact that you also, from your meetup group, you also started to do really large events, right? Because you grew a following, and then you started doing like national events. Can you talk about that? How you transitioned into that?
Yeah.
And then we'll dive into some other stuff after that.
Awesome. Let me uncover the question. Number one, you're wondering if once COVID is over, am I going to be meeting back in person? And there's two schools of thought. Thought number one is, what got me here won't necessarily get me there. And so as you utilize a tool or a strategy like Meetup or like podcasting or like direct mail or whatever, once there might become a time where that strategy doesn't work as well as a different type of strategy. So I totally get that. However, for me, I plan to go right back to meetups because of the three pillars of influence that I've talked about on other shows as well. Pillar number one is social media. Pillar number two is meeting in person. And pillar number three is your thought leadership platform. So I believe that when you have all three, and that you're going to be able to add the most amount of influence, give and get the most amount of value. So I believe that I should be active on social media, whether it's Clubhouse or TikTok or Facebook or LinkedIn, or you name it, whether any of those social media platforms, I should be active on. It should be relatively easy for people to search me if they're ever looking for me. It should be easy for people to know who I am to the core. And I do that through social media. In person means a lot. I believe that you get those people who are seeing you are going to do business with you much faster when you can meet in person. I do count Zoom one-on-one, like Bo and I are face-to-face together right now. This, I can see your facial expressions. I can see how you respond to my questions, and you and I can have a dialogue. This counts for me as meeting in person. Having a storefront would also count as meeting in person. Like some banks, they're online. Other banks, they have a storefront. I think it's beneficial for you to meet in person, whether it's Meetup or a mastermind or a conference or workshops that you host to help your avatar. I think meeting in person is a strong, fast, beneficial way for people that are your perfect avatar or your perfect client to see you, understand you, and get to know you. It makes it much faster for them to trust you. Know, like, trust. And then the third pillar is your thought leadership platform. Thought leadership platform's main purpose is to get people to be able to talk about you when you're not in the room. Now, a lot of these thought leadership platforms, maybe even like this YouTube, it might get edited and published and post-production and turned into something beautiful. And it might have, our names at the bottom, and you never know. When I talk about meeting in person, I'm not talking about a YouTube channel. The YouTube channel or the podcast is going to be your thought leadership. A book that you wrote is your thought leadership. And the main thing that you're looking for is to have people talk about you, even when you're not there. So meeting in person helps them trust you faster. Social media helps them get to know you as well and search for you. And then thought leadership is you putting your message out into the world so they can share it with other people. You had another piece of the question. Okay, so will I go back to it? Yes, because of the three pillars of influence, and I believe that you need all three of them. And then I think I missed part of your question.
So now, as I was watching you, then I all of a sudden a few years back I saw you launching like a live events, and
Oh yeah.
you brought in some powerhouses along with yourself, and so I think what's important for people to note on conversations like this, even if it's not specifically, and I'm sure we're going to dive into real estate. I think it's more important to be, I kind of agree with Gary Vaynerchuk when he says, like, you're not a next company, you're a media company. We're all media companies, right? First, because if you're probably not going to hit your goals. And so like, I took that to heart, and I actually like the marketing and the kind of like thought process behind marketing more so than real estate. Real estate to me is just a way to get to the financial freedom I want. But if I was able to probably be a marketing guy full time, I would probably do that, maybe at some point right. Like, and I think that's kind of where you've positioned yourself, right? Like you're still doing your real estate, but you saw a need to help people on that component. Diving back into it, I saw you come on the scene, and you were probably there for a long time before I noticed you. But I noticed you, right? Like it wasn't like overnight that you became successful, but all of a sudden I saw you kind of just kind of explode into the scene, right? And you just were taking massive action, and you did a couple live events, and those blew up. Can you talk about like going from like a localized meetup group and like a localized real estate kind of authority figure to then transitioning into like a national figure to an extent, right?
That really started when I went to the Best Ever conference in Denver. So Joe Fairless does a conference in the Denver area once a year because he's got a lot of, like Ben, who's one of his partners on the Best Ever conference. He's from here. He lives here, and so basically, they were coming into town, and I had the biggest meetup presence around. And I had just gotten onto Joe's podcast, and I was talking about meetups and everything, like what I was doing on Joe Fairless's podcast. And he came out, and I had just started my podcast only a few months before that. And I was trying to think, how do I take this to the next level? Like my meetup is starting to get talked about by people outside of my state where there's not a lot, and not trying to brag, not a lot, but there was people coming in from out of the state to just visit the meetup, either because they wanted to copy it and just kind of do something similar, or they just wanted to grow their network in Denver. So they would come, as our meetup was internationally recognized at the time. But here I was thinking about how I'm going to go to the next level. And I saw Joe Fairless was doing one of his first conferences. And I thought to myself, I could do a conference. And so I had like a few cool people fly in, like Joe Fairless, Brad Sumrock, Rod Cleef, Jason and Pila Urusi, and I could just keep going, but I had some really cool people fly in to speak at my meetup, and they got value. Some of them, if they have a coaching program, they got lots of people to join their coaching program, and so they made lots of money. But I just thought, okay, well, I'm already getting intercoastal speakers to fly in to speak at our meetup, and they're seeming to get a lot of value. What if I tried to do like a all day event and fly more people? So that was my first step, and I learned about it at Joe Fairless's at his thing. So I was like, okay, how do I do this? So I started promoting I was going to have, I think it was called the Asset Class Summit. I was just getting the top person in all of these different asset classes, and it was just battle. And so I did it as a one-day thing, flew lots of people in, and we had a couple hundred people at the event, and people started talking about Adam Adams's conferences. So it was kind of funny. It wasn't even that big. They're like, oh, Adam Adams has a great conference. So I thought, all right, I'm going to do the Finding Deals Summit and the Raising Money Summit. And so in one year, we hosted like a bunch of different conferences, and it was This is a big takeaway for your listener if they're going to do this. A bunch of conferences was way too much. It takes months to really organize a good conference. And so I want to suggest that you don't go all in like I did, but just do like one annual conference. And a couple of takeaways if you do it is you're going to need to have butts in seats. You're going to embarrass yourself because all of your speakers are going to fly in and they're going to be like, where is everybody? I thought you had a conference here, but all I hear is crickets. You know what I mean? Mm-hmm. And so I thought, how am I going to do this? So I had to become more marketing. And here's a few tips, tricks, and strategies to be better at actually getting people to show up. Number one is if you are private messaging and calling people one-on-one, I know it's a lot of work, they're more likely to come. Number two is if you have a way to give people a value if they take action fast, they're more likely to take action. So for example, I would go out and I would say, I would call somebody and I might say the tickets are, $399, $399. That's the tickets are $399. But Bo, I just like you, man. And I know you got it. There's a lot of people there. How about if you buy the ticket today, I'll just make it $100. I'll just take off the other $300 and save you a bunch of money. Just buy it today and promise that you're going to come out. You need to come out to this. And it's like, oh, that's cool, Adam. I'll pay for it for $100 and you're getting a big discount. So that's one way that you can get people to take action right away. Other things that we have done is utilized affiliate relationships, like with the speakers, having the speaker make some money if they share it with their people. For example, many events are usually like 50%. So the speaker sells a ticket, they make 200, and then you make the other 200, for example. And so those affiliate relationships helped a lot. Marketing images where we would make a promotional image of the speaker. Say, for example, Bo, you were coming to speak, then we would take your handsome face and we'd throw it on an image that's branded toward this, and it would have the dates and your affiliate link, and that would make you feel good because you look really good in the photo, and you're proud of yourself because you're speaking at an awesome conference. And we ask all of our speakers, hey, I'd love you to speak, but if you're going to speak, I'm going to give you this thing. Just post it on your social. And, you can actually, if you ask people after the fact, if you're like, oh, hey, by the way, you're speaking, would you mind sharing this on your social? It's not going to work. Some of them will feel a little bit compelled, but you can say in the very beginning, you start by saying, Bo, I want to have 12 of the best speakers. You're the person who has this type of experience. I'd love to have you. There is one caveat. If you're speaking, you got to do the promotion. And if you want to be that person, I want you to be that person. If not, I was thinking of this other person who's your direct competition who I could have him do it instead. And so that you're more likely to be like, oh, no, I'll easily do that, So if you get that answer up front, it'll help. The next big thing that needs to be said to the listener who might be thinking of starting a conference, our first couple of conferences, we invested money. I use that as a euphemism for losing money. We invested money. It cost us money with ticket sales and venue and food and all of these things. Some of the hotels, they'll give you minimums. They'll be like, all right, you have to spend at least $1,000. And you're like, oh, cool. We can do 1,000. And they're like, what do you want? And you give them all these things. And then later on, they're like, oh, well, you wanted lights. You wanted internet. You wanted food. You wanted water. By the way, water costs money. You wanted coffee. And it's not just a few pennies like it is when you do coffee in your house. And so that's why it's $100,000. You're like, what? I thought it was 1,000 minimum. It is 1,000 minimum, but we knew you were going to go way over. So just be careful, be cautious, because the first couple of conferences we hosted, we invested money. It cost us more than we made in ticket revenue and sponsor revenue and all that kind of stuff. Then there have been some that we made a decent amount, like over 600 grand. And I know other people have made millions at one event. We're not selling giant coaching packages that could make us millions, but we have netted like 600 grand for one of our 640 grand for one of our conferences, which was super awesome to be able to add a lot of value, but also to see that the bank account went up too at the end of the day. So
yeah, and I think what we're talking about, if you're listening, people, like, you should just be taking notes. It's really, there's some really good strategy here, right? And that's, at the end of the day, whatever you're doing, this is the kind of strategy you probably should implement, unless you're already really wealthy and have a lot of cash in your bank, because these strategies are what really builds your brand, which, brings potential deals in the door, which brings potential investors in the door. And at the end of the day, that's what everybody usually needs to grow their real estate investing business, or whatever else kind of business. I know there's a lot of real estate agents out there that watch. There's, and so I use social proof, social media for my commercial lending business, right? So the more times I interview commercial real estate investors and syndicators, it brings, they're going to share it with their people, and so then it goes viral. And all of a sudden somebody's books a call on my calendar because they watched 5 or 6 of my YouTube channel episodes, and you're like, wow, it's flattering, right? Like when somebody's like, I just watched 5 of your YouTube channels, and I'm buying this building and I'm converting it to multifamily, and I need some financing. Great, that's what I do. So I just love I love kind of like how you progressed into everything. And let's kind of just dive into, how all of this marketing and strategy, got you from, you've been investing for a long time, but all of a sudden you started just doing large deals. And that all really kind of stemmed from what you were doing on your media company, right? Like, that all happened because you could be one heck of an investor, but really, you're really more like, what I see, from you, is that don't know much about exactly how you scaled your investing business, but it really came from the marketing, right? Like, building the authority, building the trust was the key to everything. And just curious, like, just to kind of walk through how you just went from, owning some smaller multifamilies. Now all of a sudden you're buying, multi-million-dollar properties, and just talk how you transitioned and used your authority through these different platforms to really accelerate your growth.
I want to mention that the big thing that influence those 3 pillars we talked about before, the big thing that's going to get you is recognition. You're building your platform, you're building your brand, you're becoming the squeaky wheel. The squeaky wheel is who gets the grease. And so if you're trying to raise money, if you're trying to attract capital for a syndication or for single family or whatever, people are going to start thinking, just like we talked about when they came to my meetup, I was in the front of the room, so they just came to me first. It's the same when you have, this squeaky wheel, when you're adding value, when you've got your podcast, when you got your meetup, when you have your YouTube channel. People tend to start doing business with those people that they see most often. So I want to talk about Gary Vee, and we'll go back to Joe Fairless as well. If I could just mention 2 people that help illustrate this. So Gary Vee, he said, this was several years ago, but he said, if you're not active on social media and voice is like podcasting. If you're not active on social media and voice, by the year 2022, you're going to lose in business. The problem is, I'm already seeing people lose in the money raising business. I'm already seeing, it's not even 2022. And people that have done lots of deals, their proven track record, they're having a challenge now to raise equity to close on their deals, because those same passive investors are staying in front of other people now. Now there's a new podcaster that has nowhere near the experience as this person does, but the person who wants to passively invest is like, well, I see this podcaster all the time. I'll just try with him. And so I've had lots of people over the last 3 years come to me being like, Adam, I need to raise all this money and like, I'm totally behind. What do I do? And it's like, here's what you do. You plant a tree 20 years ago. The next best time is now. Start your thought leadership platform now. Do what Gary Vee said so that you don't keep losing these people. You actually have to plant that seed. And then if it's an apple tree, you've got apples forever. But you need to cultivate it, water it, nurture it, prune it at the beginning. And then you have as many apples. People are trying to go straight to, I just need investors. They're trying to make apples out of thin air. You've got to plant the seed first. The next person that I want to mention is Joe Fairless. Talking about being the squeaky wheel, he does a podcast episode every single day, 7 days a week, not 5 days a week, 365 days a year. I don't even know how many podcast episodes he's done, but I think it's probably over 2,000. So Joe Fairless is the squeaky wheel. And I was speaking at one of his conferences a year or two ago, and somebody it was 2019. It was the year before the pandemic. Somebody raised their hand and said, no, it was a month before. It was 2020. So somebody raised their hand though, and basically said, Joe, if you had to do it all over again, would you still do a daily podcast? And the look in her eye was like, I got you, Joe. This is just way too much work for you. Why are you even doing this? And you're probably going to say, no, I would just do a weekly. And Joe didn't say, no, I would just do a weekly, but he did say no. He said, no, I would definitely do a twice daily podcast if I had to do it all over again. And the whole room, there was like 500 people there. They just gasped. They're like, what? And he illustrated the same point. You got to be the squeaky wheel. You've got to add value as much as possible. That's the way that you're going to gain that influence. And now Joe Fairless, I believe that he's owns like $1 billion of assets. That's a big number. I'm at 100 million, which I think is big. His 10 times that. It's so easy for him to raise money. He's raised, 100 million plus, 200 million plus through him and his partners. And it's like, how do you do that? Well, you're adding value. You are the squeaky wheel. He's talking to people 7 days a week. Of course, he's going to grow his influence and make it easy on him to be able to close. So that's really what I wanted to share about your question.
So it sounds like those are two people Gary and Joe, that are like kind of, you look at and you've modeled a lot of the things they're doing and then brought it into your space. Who else out there do you follow that you think, like, if you're going to follow people, would be, who's another kind of gem out there if you could think of somebody?
There's a lot of amazing people. And frankly, I don't even think somebody needs to be famous for me to learn something from them. I use these two as examples, mostly because I have an impression that many of your listeners have heard of these two. But I mean, I've learned a lot from my dad. I've learned a lot from my mom. And there's many, many, many others that are less well known. Sean McCloskey is a coach of mine. He helps develop leaders. It's called Leadership Boardroom that I'm a part of. But Sean's group is amazing, and he himself is amazing. He's somebody that I've taken quite a lot from, and I've learned quite a lot. We disagree on some things. Like I say, you should never pay off your house. If you have enough money to pay off your house, you should be investing it somewhere else so that you can only pay your 2-3% interest rate on your house, but be getting the 12, 13, 14, 15, 17, 18, 20 over here. He feels like you should pay off your house. That's the only thing we really disagree on. But other than that, I've learned so much from Sean. And his house is paid off. His Jeep is paid off. He doesn't worry for money. He's got his business systems in place, and he's definitely somebody that I look up to. I respect. I like his thoughts on taxes. I like his thoughts on simplifying your life. but I don't know if you've heard of Sean McCloskey, Bo.
No, but I'm going to definitely look
Okay.
him up after this because he sounds like, yeah, I love listening to different people. I mean, I think that's the beauty of the world now is that I can go on the treadmill at the gym and I can go, okay, I want to listen to a podcast. So when I do my low impact cardio, it's like I want to spend 50 minutes just learning something and also getting a little bit of a workout in, and just that's what I do in the morning. It's actually enjoyable. Like early mornings, but kind of my morning ritual, and just kind of like listening to podcasts, right? Like that's a perfect time to listen to a podcast when you're doing low impact cardio. And so I'm always just looking for people I can get value from, and usually I'm kind of burnt out of just that real estate specific podcasts. I'm really more like a conversation like this, where it's like we're talking about real estate in theory, but we're really talking about like building a business period, like building your brand. And like to me, this is a much more relevant conversation to have, because I think the real estate part of it is obviously everybody needs to learn the components of like what's a good deal, what's not a good deal, what's a return, what are investors looking for, but really I think you proved a good point when you see these up and comers that actually just brand themselves really well, and now they're like raising millions and millions of dollars, or they're getting more deals because they have more of a brand out there and people are bringing them deals, versus the kind of the old timers, let's just say, that don't have a good message, right? Like, and you could be, and I think it's a static ad versus like this kind of advertising, right? This is like people can relate to this. They can get to know you. Like now that we're talking, I'm like, oh, this guy is so much more in depth than I would ever thought. Like, and I'm starting to get your story, right? Like, and I think people out there that are listening, that's what they want. They want, because a flyer or a social media pic is not going to, like with some motivational BS on it, is not really going to do justice for anything. I mean, sure, you should have a little bit of that, I think, but really people want to hear, like, they want to learn about you and know that, like, hey, if I'm going to invest with this person or listen to this person or, use him for his loan services or his real estate services or whatever, they got to like you at the end of the day, especially if they're going to park a lot of money with you. So really appreciate that fact. Can you talk about, like, I'm actually kind of curious now in the real estate investing space rather, your thoughts on the market right now. I think, I just have like this kind of, it's such a heated market, right? Are people overpaying most likely, buying on today's interest rates, where there might be, some interest rates that go up in the next couple of years, where they're thinking they're going to be able to reposition this asset, and they're going to be going from a 3% rate environment to a 5% rate environment. I also think you're going to see a lot of people that are doing value add deals that are not going to be able to get the, in their bridge loan period, aren't going to be able to get the value add done. They're going to be stuck not being able to refinance. 2-3 years from today, what are your kind of expectations in the market, and how have you positioned yourself? Are you kind of being a little bit more tentative and kind of waiting to thinking that there's gonna be more opportunities the next year or two versus right now?
I like the question, and it's really tough. I do study. My team studies. My team's always looking at different markets, and we want to be the best. But my real answer on the market is, although I've studied and I can see pros and cons, there's also a lot of economists that are putting out information. And sometimes I wonder if it's real information or if someone paid them to do it. So it's a loaded question. I'm going to give you a little bit of my thoughts, which could be totally wrong, totally wrong, because I don't have a crystal ball. Number one, I think that the stock market is propped up and has been propped up more than it should be for years. For like 5-6 years straight, I really feel like stocks shouldn't be selling at what they're selling at. I see inflation happening. When inflation happens, okay, so the stocks, they concern me because in general, there should be other dominoes behind that stock when the stock goes down. It should affect jobs. It should affect all sorts of stuff. So I am concerned, but I don't know. Uh, as far as right now today, there has been quite a bit of inflation. So we're seeing that cars are costing more, apples are costing more, bananas, milk is costing more, houses somehow are costing more. I'm not sure how or why. I think part of it is because they are always making more babies, but they're not always making more land. And so real estate inevitably is going to continue to cost more. But I also see, because of inflation, and some of it inflation, that I believe that if you buy a property right now, it will benefit you, especially if it cash flows, but also because it can be a hedge against inflation. You buy it at a certain price, there's a high probability, higher than almost anything, is that the price is going to go up. Even if it drops for a minute, the probability is the price is going to go up. Really, the house doesn't get more valuable. Your money just is getting weaker. So the way I think of it is like a long, long time ago, this much gold could buy this much of a three-piece suit, and it could buy this much of a car and this much of a house. They were all the same. Now, today, the same amount of gold buys the same amount of three-piece suit, buys the same amount of house, buys the same amount of car. But the dollar number has changed. What used to be that you could buy this for a nickel, it's now $25. So nickels have changed in value. Gold hasn't really changed in value. Real estate hasn't really changed in value. Yes, the price is different today, but I really believe that the point is that the value of the dollar just goes down and down. There's inflation continuously, but gold is always going to buy the same amount of three-piece suit, and the same amount of three-piece suit is going to give you a down payment for your house, for example. Interest rates. Most of what I'm hearing is that interest rates are going to stay low for the next 4, 5, 6 years. It could be wrong, unfortunately. And you mentioned bridge loans, and you mentioned what might happen if we take on a 2-year bridge loan, which is like a fix and flip loan, but for apartments, for the listener, in case they don't know what a bridge loan is. As we go and get these bridge loans, if it has a 1-year or 2-year term, we could be totally screwed because, as you stated, the interest rates could go up. Then it gets even more difficult because administration recently changed over to a Democratic president, which generally wants to raise rates, raise taxes, make more money, et cetera, et cetera, et cetera. Regardless, I don't care what your political belief is. With the current administration, it's possible that they raise interest rates faster than if they would have raised if we had a Republican president. I think that we have a weak economy, personally, and I don't think that they should increase interest rates. And because of that, and what some other people are saying, I feel like I can believe in them when they say that it's going to be at least 4 years before you see the interest rates come up. It will probably crumble the economy if they raise them too quickly. So we'll see what happens. And then just overall strength of the market. I think it lends a reason to want to be a little bit diversified. Robert Kiyosaki is somebody who continues to buy gold and silver and has been doing that for years. He's always run his business, got the best tax breaks that he could by employing others, and he's always put his money into apartments. Most people don't know where he puts his money. He just says real estate, but it's always been syndication. I would say, in my opinion, that the strength of the market is overall weak, even though that we're at very good supply and demand. Like, it shows that we will keep some real estate prices for a while. However, and I know I'm talking in circles, it's just that the market has so many factors, and I've got to think about each of them independently, and then how do they fit with each other. So ultimately, even though many people feel like we're strong, we're not going to see a bubble break, my team stopped doing acquisitions in April of 2020. We decided to take at least a year off. And so right now we're starting to underwrite again. But our underwriting is extremely cautious, careful, and conservative. We are going into it thinking of all of the downsides, wondering how low, stress testing is what it's called, but how low could this property go in economic occupancy and still pay the bills? What is my DSCR? So, and what market should we be in? Because some markets have a headwind and some markets have a tailwind. Some are benefiting you and some are holding you back. Right now, we are finally starting to underwrite deals again. And as we're underwriting, we're being more cautious of the markets that we are going into, making sure that they have job growth, job diversification, population growth. A certain population, we look at 1 million plus in the MSA. We're looking at all of this and starting to re-decide which markets we're going to be focused on based on how they've performed over the last 10 years and especially how they've performed over the last 12 months. Even though I didn't really answer your question, I just danced and played a circle game. I hope it was valuable.
It was very valuable. Where is the majority of your assets right now? Like what states, if you don't mind just sharing just briefly?
The most of them are in Texas and Missouri.
Yeah. And Texas is like one of the hottest markets right now, it seems like.
Oh, yeah, for sure. It's funny. I won't mention names because it was a private message that she sent me, but I host an inner circle with people that raise capital. And she let me know that she just bought this property in Dallas and she bought it for like $80K per door. And somebody just is under contract for the same asset class, basically across the street, for $117 a door. Mm. And so that's over $30,000 per door. That's on just 100 doors, that would be $3 million that they just made in 3 months. So yeah, Dallas is huge. It's got a lot of, the educators, Brad Sumrock, Dave Lindahl, Joe Fairless. All of the educators buy there, and all the educators look there, and they teach there, and they do tours in Dallas. They do tours in Houston. What's his name? Del Walmsley is doing it as well from Lifestyles. There's so many. And also because of Texas is so big, they actually have more apartments than like all the other states combined, basically. So it's pretty remarkable. And it's been going up and up and up. And to give you my opinion on the Dallas market is where I see it today. I still see it going up. It still has a better, it still currently has a better cost of living with good jobs than most of the other places that have good jobs with a weak cost of living. So your money currently is still buying more in Texas. I think that they have the ability to continue to go up, which sounds crazy. People have thought for a long time that they were going to stop, but there's just so much room still to be able to grow there that I'm not concerned for anybody.
But also too, there are, investors overpaying in this market, thinking they're a little bit too bullish, and some of those investors are going to get burnt, in the next couple of years, because not everybody's successful, right? Not every plan always works out. And I think in times like this, everybody's like a rocket scientist, right? Like everybody's a genius.
True.
And it only take, if people can remember back to 2007, 8, 9, right? Like what happened, right? Like, not that that's going to happen again, because it's a different world, and there's not all the stated income loans and things like that. People had actually qualify for financing from an income standpoint, as far as residential. But also, I think that people they forget that in life things aren't sustainable sometimes. To appreciate. I was looking at properties in Arizona. I had a friend that's buying Airbnbs. And like the single family home that was selling for 300,000 2 years ago is now selling for almost double the price in like 2 or 3 years. Right? That's kind of crazy. So nobody has a crystal ball. It just, I don't know. I like that you guys, kind of took some time off and kind of looked around, and now you're stress testing things. Probably. What do you guys usually stress test, like, especially in an environment like this? You say, okay, we're at 95% collections right now. If we want to make sure this thing underwrites at 70%, is that kind of like the stress test levels you would probably look at? That it would break even at like a 70% level, occupancy level?
Technically, when we're stress testing, we're looking for the breaking point at whatever it is that we're offering. So what's the DSCR, and what is the occupancy that is needed to be? Knowing the exact number, I'd have to ask my underwriter to say, when are you saying let's put in an offer, and when are you saying let's not put in an offer? And it might be 70%. That sounds and feels great, but I'm not the underwriter. I'm the marketer on the back end. So
perfect. I love the answer, because I'm the marketer too, and that's what I do. But good answer. Okay, I know we've been talking for a long time already. Geez, it goes fast, because I meant this to be 40 minutes, and I don't want to take too much of your time. But let's dive in real quick on the evolution and how you then saw the need to help other people grow their platforms, and how you said, okay, I'm going to teach you, or I'm going to have this kind of blueprint that I'm sure people are reaching out and going, Adam, AAA, how did you do this? Right. And so you kind of built a program to help them do the same kind of thing.
yeah.
And are you just, can you give me a kind of a sampling of who you're working with? Is it just all investors? Are you working with, real estate professionals that are selling, like commercial real estate brokers? Talk about that. And then we'll kind of wind down from there, and maybe hopefully have you back on to really dive into some other topics, because I didn't get through all my topics, but that's okay.
Got it. But this is how it started. I was at somebody else's conference, and I looked around, and whatever the company was, I do know it. I'm just not going to mention it. There was over 1,200 students. They boast about having 300,000 students that they teach how to syndicate deals. And in the room was 1,200 people. And people that I knew that were doing deals was less than 10. It was like 6 people. And I kept meeting people at that conference that said, like, oh yeah, I started this program 3 years ago, 4 years ago. And you want to be impressed with them for not just starting yesterday, but it's almost sad, because like they've been in this program learning how to syndicate for 4 years, going to these events for 4 years. And this is just the 1,200 people, not 12,000. This is just the 1,200 people that have the ambition today to go to these events. And way less than one out of 100 of them actually did anything. And I started to ask myself, why? I started to say, what is missing? Like, why do they learn how to underwrite? They learn how to talk to brokers. They still can't do a deal. And I just was trying to decide, what is the thing that all of these people have? So I found out that it's the whole piece about raising money. I think I mentioned something about the KLTI blueprint on your show. Know, like, trust, invest. All of these people, thousands of them, 300,000 students, and less than 1% of them even doing anything. I find out that they're going to people that they're meeting at a bar and they're saying, "Hey, will you marry me? Hey, I'm handsome. Will you marry me? Hey, look at my car outside. Will you marry me?" And they're going straight to the eye, straight to the knee, and going to the invest. They're not doing the K, which is your influence, the thought leadership, getting people to know who you are, staying in front of them, adding value, which means nobody knows who they are. So very few people like them, and even fewer people trust them. And as they keep going around asking people to marry them or to invest with them in their deal because they got a good deal, it's a handsome deal, they're failing. And so I figure, all right, it's easy for me because people are chasing me. People are like, "Hey, Adam, can I go in your deal?" And so I thought, if all I do is teach that one piece, how to get in front of your investor so that they're chasing you and you don't have to chase them anymore. If I just teach that one thing, let them take their courses from all of these great educators that are engineer by trade in their mind. They know the numbers. And I just teach you how to market yourself so that passive investors chase you. So here I am at that conference and I figured out the problem. And I said, I'm just going to teach people that one thing. My meetup group at the time was recognized as one of the 6 top meetups in the entire world out of 225,000 meetups at the time in 2018. And additionally, my podcast was ranking in the top 1% among all podcasts globally. And so I said, I can just help them grow these pieces, help them launch their what is it called? It's a lead magnet. Basically, it's a piece of value that gets people to opt into your list. So I could teach them how to build this lead magnet. I could show them which lead magnets are the most effective. I could show them which platform, which is Active Campaign, by the way, which platform to use to get that to work. And I could show them how to integrate it. And so we built a done for you service where we build your lead magnet. We build your podcast. We put you in front of your right people. We brand it for you. And we felt like that would be helpful for most people to be able to start having money chase them. And so far it's working. You asked a few people that we work with. In general, most of the people that are in our mastermind or inner circle, most of them are newer. So they've taken a coaching program from one of the greats. They've learned all those pieces that are going to be important for them. And we're helping them to be able to raise the money, to attract the capital, to grow their influence. But a couple of our clients are extremely experienced. They've been doing this for a long, long time, but their passive investors started going with the other people. And so they're like, I don't like Gary Vee. Remember how we talked about how Gary Vee said, if you're not doing this by 2022, you'll lose. So it's those guys that used to be awesome. They are still awesome people. They're some of the coolest people ever, but they used to be the main person that the passive investor looked at. And now the passive investor started looking at in other places. And so they're like, I feel it necessary for me to join a group like this so that I can grow that. Does that answer your question?
Yeah, no, that's great. So most of these people in this mastermind are more on the investor side. They're syndicators, most of them, or
100%, but not all multifamily. 100% of them want to raise massive amounts of money. There is so many people out there that could teach you how to just raise 100 grand. I'm not here to teach you that. I'm here to teach you how to raise millions and millions and millions without fail. So yeah, everybody in there is focused on larger things. Some of them buy businesses, some of them buy apartments, some of them buy assisted living, hotels, mobile home parks, And there's even more than that. There's a couple developers in there that have been developing for a long time using their own money and doing huge triple net lease for AAA clients. And now they're like, I want to start syndicating and letting other people in on these things and even do bigger because they're multimillionaires already. They're like, I even want to do bigger. So they come to us to learn that one piece. How do you get in front of people, get them on your list, and stay in front of them on the email? And we automate that for them.
I love it. All right. Well, we're winding down here because I don't want to keep it much longer, but how can people start to, like, obviously they probably know, like, and trust you now, even if they've never seen you before, because I think we spent the last hour building trust and asking good questions and you're giving good answers. But how can people follow you? What's the best medium for them to follow you? And then is there a different, if they're interested in joining your mastermind and you're kind of done for you authority building podcasting system?
Sure. I'll just give one place, just to keep it super clean and call out just one person. If you have a podcast or you're about to launch a podcast, I can help you really grow that. We guarantee its results to get in the top 1%. And the main thing that you would do is just go to growyourshow.com, see what we do, and schedule a call with me. It's called growyourshow.com. And I'll just give them one call to action so nobody's confused. They don't have to chase around. But if they do want to start a podcast and launch a solid podcast that we can guarantee it gets ranked, we're very, very good at it. We have 20 plus clients that are all ranked in the top 1% right now, a flawless track record, and I can help you grow a podcast if that's what you want to do.
Amazing. Thank you so much. I'd love to have you back at some point here, just because we only touched the surface, and I'd love to talking about marketing and everything we talked about. And thank you everybody for staying with us for a longer show today, but it was, I think, probably the best nuggets in a long time that you guys, if you go back and think about all the nuggets that were dropped, you're going to get a lot of value out of this. And just think about how you can build your brand, your platform to grow your business, whether you're raising money or you're, a loan broker like me, or you're a real estate agent. All this is applicable for you. And I really appreciate everybody listening, and please share and like this on YouTube or on Libsyn or iTunes, wherever you're watching or listening. I really appreciate you guys, and we'll see you on the next episode.
Thanks for listening to the Investor Financing Podcast. For show notes and useful resources, please visit investorfinancingpodcast.com. For questions or comments, email info@investorfinancingpodcast.com. If you enjoy our show, please share it with your network. Until next time.